Taking a look at today's interest rate markets, let's take a look at the 10-year note futures as they're realizing further upside today. After yesterday hitting an intraday contract low, we did see some strength throughout the session, closing higher yesterday, now closing higher once again today. Currently right around 118.26. Now intraday we did see 119.06, so we got into the 119 handle briefly today before backing off, but still realizing further upside. And I think when you look at some of the factors contributing, really, that's the shifting dynamics from a global perspective as far as economic growth expectations. And also some of the Fed speak the last couple of days may be viewed as less hawkish as what was kind of priced into the market to some degree. And the third thing I think is also a shoring up of expectations and positions prior to the CPI tomorrow's PPI on Thursday, where we got some inflation data coming out that the market's going to be very much focused on. So I think that's having an impact here the last couple of days. That's why we're seeing yields coming under some pressure and Treasury markets finding the ability to rally for a second session. Now looking at the yields, day over day, we did see a drop of 10 basis points in the 10-year down to 298 basis points, so below 3% currently. Intraday, 294 basis points before, again, as I mentioned, seeing a little bit of weakness and seeing those yields pushing back up towards that 3% level, just shy of there right now. But also the yield curve did flatten today as the back end of the curve rallied more so than the front end of the curve. So we did see those back end yields come down more so than the front end. Across the entire yield curve, though, we did see strength in the Treasury markets pushing those yields lower, but just a flattening of the curve as we move into the CPI data release tomorrow morning.